Hey, it's Sam from TradeDevils.com, and this will be the first in a series of 3 videos to introduce you to some indicators that we've designed specifically for those of you that trade with tick charts. Now, this will be part of a series that will build towards a complete tick traders template that we've been using for some time, and we've refined it and continued to improve it. And we think we've got something that will be very useful, particularly for those of you that perhaps are uncomfortable or just prefer not to use Renko charts. So particularly in cases of extreme volatility like we're experiencing in the market, when the Renko brick size gets to be too large, they become really almost untradeable for the typical retail trader's account size. So, and I would include that right up to 50,000 would be problematic to be trading with Renko bricks that are 14.4 and above. Just the risk per bar is so large, and when they get that big, I, along with my team, we all switch to tick charts. And we certainly have extreme volatility in the markets right now, so I thought this would be an appropriate time to do this little series here. And we're going to focus first on the devil bands. Now, I did touch on these briefly in the playlist that we sent out to all of you, and I did get a number of questions, so I thought perhaps just a relatively short video here to introduce them to you might be the most effective way to do it, and then we'll follow that up with the other individual indicators that are specific to tick charts. So let's focus first on the devil bands. Now here, I've just got a 2584 tick chart, and I do have our initial balance indicator on it just to frame the day. I find without it, you're kind of out in space. So I did put this on here so we can get some context on the day. Underneath, I have our Wada-Atar explosion indicator that will be featured in a follow-up video, but partly I need it just so I can grab underneath the chart as we change tick sizes here. But for the focus of this video will be the devil bands. Now, the devil bands are what we think is an improvement on a traditional Keltner channel. The main difference being the center line. So in a traditional Keltner channel, you might be working with either an EMA or an SMA, just a simple moving average, and then the ATR for the outer bands. Well, our modification to that is rather than use an exponential moving average or a simple moving average, we're using the McGinley dynamic. Now, that is entirely possible that's an indicator you're not familiar with, and rather than bore you with the formula, I'll refer you here to this page on the website. This is on investopedia.com. It's a great little article here. You could find it just Googling the most reliable indicator you've never heard, McGinley. So something like that will get you to this page here. And this is kind of an interesting explanation, and I think in the interest of time here, so this video doesn't go for 30 minutes, I let you come down here and understand. Here's the formula for those of you that are drawn to that insight. In general, McGinley was trying to improve upon a traditional moving average, and the way that he goes about doing that is to accommodate for increases in this and decreases in the speed of the market, which is why this dovetails in so nicely with tick charts, which are designed. Well, let me rephrase that. One of the advantages of tick charts is that they compress areas of inactivity. So for example, on this tick chart here, the entire overnight session is compressed down into this small section here, and of course here we get the open and the market expands from that. If we had done this on a time-based chart, of course there would be this long lingering period of time in the overnight. So that's part of the advantage, and additionally, tick charts let you start to see, and particularly in the way that we calculate our tick size, we are looking to identify those times during the day when the tick speed increases or decreases. And the McGinley dynamic is designed specifically to improve upon the way a moving average would handle that. So obviously the best way to show this to you is to just put it on a chart so you can see it. So I've got several indicators here. We're just going to focus on a few of these for this particular video. So here's the McGinley dynamic line here. This is our version of the Trade Devils McGinley lines. It's got a smoothing factor. I think the default, if you were to purchase this, would come at a 0.6, right? I'm just being a fib head, right? Can't resist going to a 618, and then again, I'm using a fib number for the period here. So I've got a 21 period and a smoothing factor of a 0.618. So let me make this visible on the chart. You can see what a McGinley dynamic looks like. Now this pops that up. So here's the McGinley dynamic, right? It's on a 21 period, and it would be an EMA or an SMA is not going to be terribly far from this, but I think when we put it into the bands, you'll see how it's advantageous. So we can see, of course, colors based on trend. So you'll note that it hugs the market rather nicely here, right? So we just get a green and a red signal here. Now, the way we use this in our devil bands, let me just make that switch. So just so you've seen what a 21 period McGinley looks like. Now I'm going to take that, I'm going to make that invisible, and I'm going to go to our devil bands and show you here. Right, so the center line of our devil bands is going to be that very McGinley dynamic. So we've got a 21 period with a 0.618 smoothing. So that's identical to what I just showed you on the McGinley. Now, in addition to that, and here's where we think we've made some improvements to both the McGinley and the traditional Keltner. Well, I can choose the ATR period. So I'm looking at 100 period or 100 bars here for an ATR multiplier. And for this, there's two ways we use the devil bands. And in this one, I'm going to show you this with a single ATR period. So I want an ATR multiplier of 1. Now, this is a key feature here. This is the chop level where we have lack of trend, and that's relative to the angle of the McGinley line. Then again, as I said, we've got the 21, the 618. So if I put this on the chart, oh, pardon me, I've already got it on the chart. Let me just make it visible. So let's get it on the chart. Let's bring this down here and open this up so you can see what's happening here. So Friday was a particularly volatile day. We had the huge drop and then a full recovery. Well, damn near a full recovery, right? We didn't make it all the way back to our IB high. So as we're coming down here, so I want to focus on a couple of things. Of course, the way the color coding is a bit of a, right? I say this in jest, but it's partly I've done it for my own sake here, right? So the color coding is a bit of a, I say this in jest, I don't mean to offend. It's a bit of a dumbass filter. Okay, so when the market is coming down, and I do this partly because of my natural tendency to want to pick a turn. So I've had to design tools to keep me from that my instinct is to want to look for a pivot, right? So try and pick a turn. So a lot of what I've done here is color code and create indicators here to just try and keep it simple. So in the simplest fashion, right? So you might ask a 5-year-old, how would you trade this? If it's sell it when it's red and buy it when it's green, right? So a 5-year-old is going to be short the entire way down, right? So that's if you will. So as we get over here, as it's green, right, we're only looking for buys, right? So it's a bit of a dumbass filter. Now, once we start going sideways here, I'm going to open this up a little bit more. You'll see that we get into periods here where we have the devil bands in the center line being the McGinley are going flat. And what's happening is the McGinley is going sideways here. We're getting lack of trend signals here. So the way that I will trade this is I'm looking for breakouts that get outside of one ATR. So this being a perfect example. So we get all of this separation here from, this is remember the outer bands are a single ATR period. All right, so again, we're looking at 100 bars. What's the average true range over that 100 bar period? And that's what's giving us the outer bands, right? That's one average true range. So as we move outside of the bands here and we accelerate away from them, I know this is a very strong trend, right? You'll notice here in the Wada Atar, it's also complementing that, but again, we'll save that for another video. This is a particularly good example here because we get outside of the bands, then we come back in, go right to the center line, and now we come back out. Right, just a gorgeous kind of a trade there, and I'm tempted to go to the fib retracement, but we'll save that. Right, you guys have already been through that. So as we come down here now from this pivot low here, right, and again, the idea here is not to try and pick the turn here, but as we come back up, get inside the bands here. So inside the bands here, we have lack of trend. So you see we get a little white, a little green here. We're just kind of in a chop zone here. It's not until we break out of the bands here, and you can see here, this is a pretty good move, right? So up here, even just pushing, that's $750 right there, just on the push outside of the bands here, because I'm getting in excess of the average true range. So I know that while this can go for some period of time, as we saw it here, eventually it's likely to come back into the bands as those that caught this move, right, start to take profit. Same thing over here. We come down, we get outside of the bands. That's a bigger move than you think, right? There's $525 just right there. Now, are you going to get the first tick out of the break of the bands and then the tick low? Likely not, right? But that might be something you might use a return into the bands as a stop, right? Again, that's going to be the individual trader, how you manage your profit targets and your stop placements through your ATM, whether you're using an ATM or you just finger on the mouse as to when you're going to take profit. But as we come back in, now note here the McGinley goes green again. Now we go white. So the potential here is for a trend change just based on the color of the devil bands, right? And the center line being the McGinley. But note, you'll recall that with just the McGinley, we lose that section where we have lack of trend. Well, all we get is green-red, right? It's either going up or it's going down. The way we've adapted here is by using the bands in conjunction with the ATR when we get into these periods of chop, because this kind of a section here, this is a trade. Every short-term traders, that's your nightmare right there. It's a lack of trend. You don't know which side of the market to be on. Now this is 11:30 in the day. You've had this massive downtrend all day long, and you're wondering here, if you're over here, your inclination might be that, well, listen, it's been down all day. We've come back to the IB low. I'm thinking more down. So here we get a little break out of one ATR. So there's that little move. So again, it can be deceptive to the eye. That's $575, right? Now we're back. We're on the other side. So right off the bat, look what's happened here. Again, I say this with just trying to be humorous without being offensive, right? So it's a bit of a dumbass. Okay, dumbass. What color is the center line? Right? Do I want to be looking for sells? Because you might look at that and think, okay, well, let's just apply something that particularly those of you that just bought the measured move or the toolbar or the auto fibs. You might look here and say, hey, well, there's a 50, there's a golden zone. Do I want to take that short? Well, of course, right? It's always easy in hindsight, right? I know that, right? But if you're sitting here, the point being, okay, everything's gone green here. Now we'll get to this in the follow-up video to that to demonstrate that buyers are clearly in control here. But as we break that, right? So that's the one that you're looking again, as we talked about in some of the other videos here. When you're sitting here. Right. Well, yeah, we got a little one tick break here, but look, it ends up going to first and second target, right? So there's got to be some way to help identify who's more likely to win, because you'll recall, as I said, not only in the webinar as well as the follow-up video, there's no definitive way for us to know which side of the algo, buy side or sell side of this algorithmic pattern here that we know is in the market, who's going to win that battle, right? We're always just trying to use everything we can to try and identify who's got the better odds here. So as you look here, we did get a little bit of green going higher here. So but would you have wanted to be a buyer right into that golden zone? I'm going to suggest not. But again, I'm trying to not get overly focused on that, but just look at what the devil bands are doing. So right here, right off the bat, okay, so all right, what's the 5-year-old going to tell you? The 5-year-old's going to say, hey, it's all green here, so we're only looking for a buy side. So it might be this little break here that gets you outside of the band. So we're outside of the ATR, right up here. That's $400 move right there. And now you got to be quick, right? Because look how quickly it's given back, right? It's almost tick to tick. You go up 400, 450, and then it comes all the way back, right? This is what makes trading so challenging, right? So from here, once we come back in, we go down $600. Right, so now then that's a point here where you might be thinking, okay, now wait a minute. Now we've gone green here. Now I've retraced here. Haven't gotten too far here. Is this a trade that I want to consider taking here on the long side? Well, it's a little bit of a trader's choice here. That's 11:45 in the morning. Wouldn't be surprising to think now that since there's a couple things that happen here. One, we've had a push to try and break these lows down here, which fails. So as the market starts to recover, some of this just nuance that comes from experience. Around 11:30, where we're looking for the counter trend move of the day. So first lows here at 10:44. They pushed to try and get new lows. This is the market talking to us right here, right? They can't get, bears cannot get a push to challenge those lows. The market snaps back. Now that ends up being the trend change of the day. I know, I hear what you're saying right now, right? It's easy in hindsight. When you're over here, you're thinking more down, right? But here, clear signal, so that makes that easier to take. Now, if you want to be more conservative, if you're thinking, okay, I'm looking for the long side here, it's the break here, right, which kind of confirms that once you get that push out of there, and we're going towards, well, there's, just to get to the algo target, there's 34 ticks. That's $425. Now, if it's me, I would have taken it right there, knowing that there's going to be natural resistance at the IB low. Right, we get through, we get a little pullback, and again, I caution you here. Look at the size of that pullback. That's $637. Now, these are 2584. These are big bars here, and one of the things that we'll look at in the follow-up, one of the follow-up videos that will be next in this series, is ways to stay consistent with the speed of the market per the tick bars, but reduce the amount of risk per bar. And we'll look at that in our tick size calculator, which should be the next video to come in this series. But now, as we move off of this section here, where again the McGinley line, or call it dumbass filter, if that helps you, I say that with a smile. But if that's helping you here, now look here. So as we go, now we're hard green here, and we're all of this outside of that outer band. Right, so I know I've got market strength here, and that move right there, if we come out of that, again, I'm not suggesting you're going to get tick to tick, the breakout to the tick high, right? Even if you're right here, there's 650. How about the first little pivot? There's 462. Right, if you rode it up until you had a stop maybe on the center line, often I'll attach my stop to the center line. Well, you got stopped out right there, so assume some slippage. What did you get? 525, right? From this move here, stopped out at the center line, 525. Now, note here, look right here. Right? So we're in the bands, we're going sideways, it's white. So this is, you might just call it a chop zone. That's a no trade zone. Now, as we come out of the bars, we come out. Is that enough? Well, hang on a second. So is this a place you'd want to be looking to be a seller? Now, note, we've been trending higher all the way up. Now you say, all right, wait a minute. Let's consider what the algorithms have done here. All right, so looking here. Now, do you want to be a seller right here? And now we've had this break, but right, the auto fibs are going to be here showing you that there's a 50 and a golden zone right here. Do I want to be a seller right into that? Questionable, right? Questionable, because certainly it broke, right? So, but this might not be the most ideal place to be looking to be a seller. Now, of course, remember, if it breaks one, you got to go back to the next one. Right, now what do we do? Right to the golden zone. Right, and that's what the auto fibs will not let you miss, because if you're drawing it by hand and you think, oh, it broke, it's going down, well, the auto fibs will be sure that you're notified here per whether it's on the side or on the chart, that there's a golden zone sitting there, and if I go down to the absolute low, there's a 50 to the tick. So now you get that confluence that we talked about in the webinar and in the subsequent videos that came with that. So we've got a 50 and a golden zone. So look here, we're red. Do I want to buy that? Do I want to try and pick the turn? Well, maybe not. I mean, that's again, it's easy in hindsight. But if you're sitting right there, right, it's been red. It's red here. We'll get into this on the next video. It's red here. Are you comfortable buying that outside of the ATR? Well, perhaps, right? We are outside of the ATR. You're sitting at that confluence point. But my suggestion would be, we want to wait for the next retrace, right? So this would have been just a perfect right here, right? So we go right here. Oh, let me get that right on the, shoot, hang on. Get that right on the pivot high. So we come next golden zone. Right, so so there's the trade. So they front run the target. So here's the trade right here. Now, note here. Now I've got everything is green. I've had this pivot here. So perhaps you didn't catch this because everything was red. Your market, perhaps, we're going to break below the initial balance low again. We're going to start to sell off. Now you can see there's all sorts of structural support here, but we hit this pivot and we start to turn. Now as we get here, now I'm buying with everything has flipped to the buy side. So the McGinley is green. The outer bands are green. Here's the trade. Right? It's right here. Right, it's $737. Now, would you have known to go again? Maybe, maybe not, right? So that's that's the monster trend of the day. But look what happens as we start to go, right? So if again, I would not have been there, right? So right, this would have been enough for me right there. That's 762. Now, do you go again? Well, that's up to the individual trader. We can kind of look at that. We kind of bring all this back in together. Now we're right to the 50 again, and everything's green. Now, if you're taking the break out of this, right, you got a couple of choices here. Right, if you're taking the break out here, well, here's that first target. There's 262. Second target, 700. Well, of course, again, you don't know how far that's going. We're getting to the open. There's 1100 all the way to the top, right? So often what I'll do is I'll attach my stop to the center line. So if you took this, you might, the assumption being you took the break here after this coming out, right? If your stop is attached to the center line, you're not out until here. So what'd you get there? Right, if you took it right here and you got all the way to here, that's $1,400. Now, as we make the pivot here, now this is the end of the day on a Friday, so you may or may not, right? This is not an ideal time to be trading, but here's front run on the 50. Right, they get it. All right, so but here, note, right? So this now everything again, kind of, I say this affectionately, dumbass filter. Okay, we've gone red. What side do I want to be looking on? I want to be looking for sell side. Now, that again, I don't know that I'd be trading this in the last few minutes of the day on a Friday, but it sure was there. Right? It was absolutely there. Right? Come up to the 50. Note, that's just to the edge of one ATR. And then it comes down. Now, let me, how am I doing here? Oh, 21 minutes. Okay, let's try and make these shorter, but I tend to digress into some of the other things because I'm just trying to show you and kind of reinforce some of the things here. Now, of course, I don't have the measured move indicators on here. I don't have the auto fibs. I want you to focus on the devil bands because they'll help you. They'll help you stay on the right side of the market. Now, let me show you the other way that we use these. So typically what I'll do is I'll have my full Renko suite here, my full Renko charts here. But note here, at the end of the day, it was 12.4, right? Through most of the day, the volatility is so high. So when it gets that high, I do not trade Renko bars. The risk is too high. So I'll go to my tick chart here, right, where you see that I have the devil bands on. But so I will use these in multiple ways. So this one here, I'm adapting just so I can show you this. So since I have the devil bands here at 1 ATR on this tick chart, right, I've got that covered. Now over here, I will do a 3 ATR with the same center line. So let me show that to you. So I'm just going to go to the indicators here. I'm going to take, do I have them twice? I don't. Okay, so let me, here, I'll just do it this way. So now I'm going to show you, this is how I will typically keep it on a higher tick chart here. So I'm going to go to the 3 ATR. So look what I'm doing here now. So we're using, you could use 100 or 50, right, to play around with it. You won't see a dramatic change, but let's use the 100 because that's consistent with what we were using before. So the ATR period, right? Make that distinction. This is the ATR period, not the period of the center line. So the last 100 bars, I want an ATR multiplier of 3. So 3 times the average true range of the last 100 bars. I've got a chop level at 46, so that's when we're going sideways. What's the angle? And then I'm using a period center line of a 50 period with a smoothing agent of 0.618. All right, so now let me apply that, and you'll see what that gives us. Now, again, I got to bring that down. So what I'll have, here's my tick chart. In this case, it's a 1597, but I always keep a longer term tick chart here because I want to see when we're trending and when we're not. So you'll note here through this whole section. Come here. This whole section here. It's white. We get a little red, a little green, but for the most part, that is a trendless section. So as you see, the outer bands go white because the center line is not, it's right here. We get a little bit of a trend. We get a very short one here for this drop. But look at the difference between this section here and this section here. When we're trending, clearly trending down. All right, we get a little pause here where the angle, right, is not as steep. And then at the end of the day, we're clearly trending here. So what that means is that if you're here at this time of the day, now this, This is very typical of the ebb and flow, as you'll see in the stock indexes throughout the course of the day. So very often you'll get your between 11 and 11:30, you're going to get your late morning trend reversal. So we get it here, but note what happens here. Look what we're doing. Just as we come outside of 3 ATR, right? We come back in. So it's a push here. Now note the difference. When we're trending hard here, we're outside of the 3 ATR band. So I know this is a monster trend. I also know it's unlikely to sustain for the whole day. Now of course it could, right? But at some point here, we're likely to go sideways. And in this case, we end up with a complete trend reversal. So through all this period of time here, as I'm watching that, again, note the time of day. It tends to be the choppiest section of the day as we hit midday in New York. Now we're choppy here, so I'm looking here. When it gets white like this can be an effective way for a scalper to take advantage of these upper edges here when we're getting just on the outside of the top here, where it's more prone to just be cyclical, right, rather than straight trend or straight trend. So this can be something that you would use to either filter out trades on a shorter time frame, or if you're comfortable with this scalping, and this may take a little time to get comfortable with this, when we get outside of the bands and then we come back in, just to demonstrate this. So if you're outside of the bands and your target is the center line, well, that right there, from coming back into the bands to the center line, that's $612. You get kind of the same thing here. Now, would you have known here that this wasn't the time? Well, we'll talk about that. Some of the other tools that we'll use to help filter when is the right time for that. But just here from this, right, just to the center line, that's $725. How about this one here? We just tag it right here, right? We start to come back down. Target is the center line from this one right here, and assuming you're not going to get the absolute pivot turn, there's $625 to the center line. So this can be an effective tool. So for example, if you caught this, let's just see if we had one here. So if you caught this right here, okay, so we go golden zone, here's first target, right? It goes to second target. By the time you're down here pushing 3 ATR, if you caught that entire move off of this for whatever reason, you stayed short. Again, it's not relevant necessarily as to why you stayed short, but if you stayed short and you're pushing down here. Now, note here the outer bands are white. So I do not have strong trend here. So if I'm tagging in terms of a maximum target here of where I might anticipate getting a cyclical bounce, if I say it that way, just tagging the 3 ATR here is a reasonable spot to look for that market to perhaps come back towards the center or return to the mean, if you want to think of it that way. Right, do you see what it does here? Right, so as we get outside, right, back to the mean. So now you can in this case you went from the outer edge to the lower edge, right? So that you will see that. But then if you're sitting down here, if you were thinking I want to get on the long side, you'd want to do that in conjunction with some additional confluence. So that could be a fib pull. Right here you had a fib pull once it breaks. Now look, once we break here, now even at a 3 ATR, right, once we get outside of this, again, it's much like what's happening here. The trend is so strong, we're outside of 3 ATRs. Over 100 period from the center 50 period McGinley. Very useful, very useful. If for no other reason than just staying out of the trendless sections. Right? I think one of the biggest problems so many traders have when day trading is that it's too many trades throughout the course of the day. And if you're more selective by using a filter like this as to when we have hard trend, right? You could even say it this way: when can I get outside of 3 ATR? When I have that hard trend, that's when I'm looking for the little retracements. That's when I want to get back into that trend. Once I start to go sideways and everything goes white, lack of trend, one of two things are happening. Either it's a pause before the trend of the day continues, is more typical in the S&P. We're going to start to go counter trend, right? At least that's been typical of late, right? So usually down early is just an excuse for larger players to buy it lower. That's all that's happening, right? So here, as we come all the way back, so you can kind of put that together and go, right? Was this really a major trend change of the broader index, or is this whales pushing it down because they don't want to buy up here at the highs, right? I would tell you that's more likely what's happening there. They'd prefer to buy it on sale than to pay retail, right? What does retail do? They're dying to buy it up here. All right, I digress again. So just again, a nice demonstration of how these can be effective and used either on as a kind of as a trend filter or as an entry filter for when we push outside of one ATR, or as a secondary filter here looking for either an indication of when we have lack of trend or more of a cyclical approach to the market where you can sell on the outside and buy on the outside, for that type of thing. Okay, that should give you some ideas about how to include the devil bands if that's of interest to you, the advantages that they offer to you. They are available on our site. You can just go over to the indicator page and you'll get a little bit more of a breakdown on what they are, how they work. And for any of you that are interested in demos, right, well, this is, so as you know, you can, if you buy any of our indicators, you get a 5-day demo of everything else. For some of you that might have that interest, this is a nice tool to maybe add into your arsenal of indicators. All right, there you go.